Then he told, let me go. You don't know how to present the thing. See, I am a lawyer and I know how to present the thing. And he went in the room and came out smoking cigar in mouth. He said, what happened? How this happened? How did you transform the Guru? Guru was supposed to transfer us. He told that, what question you asked? He told that I asked Guru that actually I am chain smoker and can I smoke in the ashram? Then in between meditation, can I smoke? Then Guru told, you are actually a silly person and you should not have come to ashram if you are so much addicted. Then he asked that, what did you ask? He asked that, I asked Guru that I am chain smoker but I love meditation. Can I meditate in between my smoking? Guru told, great idea. That will change it. So that is a reading between the lines. One has to work out. It is not only just knowledge of tax or court cases, but there is a capacity, there is a training specially called. I was fortunate to get that training because I used to work in CPA firm. They are charging 1040 return charge was about $3,000 to $5,000 and they were charging $50,000 for tax planning. And that was their main business. And India also, my brother also all India 6 and total CA and he was doing extensive tax planning. If you heard name in the old time, there was Mr. Palkhiwala, the most famous lawyer of India, tax lawyer. He worked with him also and he was tax advisor of Amul Dairy, then Saurashtra Cement, Mayur Mazmani Group, international tax advisor, and he worked as a CEO of a sister company of shipping corporation. So he was advising shipping magnates India's also for tax planning. So I have learned from him and I have got long experience of doing tax planning. So just as every doctor cannot perform surgery, every CPA cannot do that. Okay, let me tell one story of one interesting case actually I came across. That one novice people, suppose they plan taxes, how what a hazard can happen. What had happened that there were about 5 doctors and one CPA planned their tax planning. He made them partner in one LLC in Dubai and that LLC was operating aircraft business. So airline is considered good tax center because you get very high depreciation initial year. Initial 4-5 years they don't make profit, they are after only reports. So everybody could got great setup against that medical income, practice income, they set up all the losses of airline, huge depreciation. And everybody got $200,000 back, they are so happy. In 3rd year what happened that they got notice from jail. Because what happened, that airline of Dubai, small airline was caught under narcotics transfer, drug transfer. And their CPA marked them active. Because unless you mark active passive income, you cannot set up against medical practice active income. So they cannot deny that they were not active in the business. So they got notice of jail and then they had to hire attorney. Finally actually they had to settle and spend almost 5 times what they had saved. And thereafter the CPA went under jail. That CPA is sending email to us to help him to get out. So this is a real life case. So actually it requires a lot of experience and care and you have to be alert on every area. We do not make you in tax planning partners in any unknown companies. We use only your own family or you yourself own company only. And we can still save your taxes. And we do other tax planning also like state franchise tax, state sales tax, we can reduce. And then we provide other planning services like estate planning. Estate planning aims at reducing your estate tax and reducing your probate cost. Then there is a wealth protection planning that tries to protect your wealth from lawsuits. How we do wealth protection planning? There are 3 principles of wealth protection planning. First thing is that make your wealth invisible. Because whenever court order is given, you are given decree has to be implemented in certain time limit. If you cannot locate the wealth, that is gone. So first make it invisible. Suppose one finds out the wealth, then we make it inaccessible. There are so many hurdles there that they cannot access. And finally, suppose they make it access also, make it unrealizable. They accept but they cannot realize a penny out of them. So this is a whole different strategy and we do all these strategies with help of various types of attorneys. Our great advantage is that we have got every type of attorney, so you get comprehensive solution. You go to estate planning attorney, he will save your estate tax but he will increase your income tax. We have seen many times cases and we have to revise estate planning. So we do comprehensive solution, we have joint meeting and you get the advantage of every type of discipline at our firm. We have got every type of professional including insurance and all different type of attorney, contract attorney, estate attorney, wealth protection planning attorney and finance planning. I myself also finance planner and work with guardian. So now I will invite Sam. He will tell you that how people with 10 million, 50 million income can pay 4% tax.
Yeah, we're running short of time, so I'm going to take a quick 1 minute to quickly go through this thing. So, if you have questions, again, I'm going to sit back and answer some questions. what is complex planning? If you have income over $500,000, then you are considered to be a good candidate for complex planning. In this complex planning, primarily what we are doing is we are taking your income and recharacterizing this income. So when it comes to you individually, first thing is we postpone this income for the next 15, 20 years as long as you want.
So you just keep it.
Okay. Second thing is basically the complex planning. Another thing that happens is basically when we recharacterize, this income becomes a long-term capital gain for you instead of a normal income. So same income which normally you would have paid taxes, when it goes on your tax return would be showing as long-term capital gain. That is also not paid right now. It is paid after 15 or 20 years. So that is another advantage. Now this does not involve putting money again into any life insurance, 401k or those kind of plans. The money still stays under your control. You can still decide to invest where you want to decide. Maybe for your own business, you can reinvest that money, or you can invest that money into any kind of traditional investment for investments. Plus there is no cap that when you can stop this. You don't have to wait for till 15 and a half or 60 years to really realize this value. So just to give you a quick example, who uses this? Or what industry normally utilizes this? So if you really take an example, there is a transportation, technology, telecom. There are almost every major industry has used this complex planning. If you take a thing, actually 80% of Fortune 500 companies technically have this thing. So if you have a business that is making about $300,000 in net profits, you might want to start considering as a complex planning. We can set up a time and see if if you're still a good candidate for complex planning. As a benefit, as earning accrues at the entity level, value of the investment is increased without the current taxation. Any distributions of dividends at currently taxed at favorable tax rates. Redemptions of stock at time of retirement or other triggering events should also be on favorable rates, and assets are protected from the claims of corporate or shareholder creditors. That is another advantage. So it also gives you a veil of protection that if there is any lawsuit, it is protected from that angle as well. And case study, quick case study is, so if someone, let's say, did not do this scenario, and if they had an income of $1.15 million, and their income taxes at 45% rate would be at $517,000. After tax investment income, there will be basically total of $10,400 on this investment income. So your total balance left would be around 642. We have taken a 3% rate of income, so that would be 642. And over 10 years, you're talking about $6.9 million if he continues doing this thing and saving every year. Now, if you take with the complex planning, that same advantage is that complex planning deduction is $1.5 million, your operating expense is $65,000, after tax investment of $17,000, so your balance amount left instead of $642,000 is $1.1 million, so there is a net gain of $460,000, which you can do. So over a period of 10 years, you can accumulate $11 million. If you compare to normally, if you not have implemented this strategy, you would have paid close to, you would have saved close to 6.9 versus now you're saving $11 million. So there is a gain of $4.9 million every year. And we are doing this for a lot of clients who technically have this kind of income. So if you qualify, you start getting and you should start exploring. Now 90%, there are only 6 CPA firms in Dallas who really know how to do this thing, and they do this thing. And we are one of them. So that is another advantage, that we bring a lot of complex knowledge with this thing and help you. So if your business grows, or if you are becoming an entrepreneur and your business grows, we can help you to the extent as complex as your business grows. Now, do it right. That's very important. So, don't depend and don't do things half-heartedly. Research, basically understand what it is done, how it is done. Research if you're doing FBAR, if you're doing any compliance, or even if you're doing tax planning, do it with the right professionals, because with the right professionals, you're not going to do accidentally things like tax evasion, which can eventually hurt you. Right? Now, I would like to open this for any question and answers, if you have any question and answers, or I will sit back even behind to answer some of these things for you.
Thank you, Sam. Thank you, Maheshji. We'll hold the question and answer to the last.
Absolutely.
I know everybody is patiently waiting.